So glad you could join us. In case you missed it this morning, we did have an overnight export sale to talk about, and it was a little bit unusual, at least for the last couple of weeks, because we weren't talking about soybeans and we were not talking about China. We were talking about corn sold to Mexico. And actually, it was a pretty healthy total, believe it or not. It was 458,600 tons of corn sold to Mexico, and that was done over the weekend. So we thank them for that business, and we'll see if it's having much impact here on the markets. Let's take a look at the corn market here and see just what is going on in the early going. Well, on the futures board with quotes provided by bar chart, you know, we opened up about 2 3/4 to 3 cents higher, and now we're only 3/4 of a cent higher. December now trading at 537 3/4. So kind of giving back any early enthusiasm that we had from that news. Well, let's see what soybeans are doing here this morning, and we'll go to the soybean table, and we have November now trading 9 3/4 higher at $13.50. Just barely hanging on by its little soybean fingernails there to that $13 benchmark. Got as low as 12.86.5 in the early morning trade. So it's kind of a battle there. It is up 10 cents, so it is gaining back some of what it lost last week. Well, let's look at our wheat market, and we go to Chicago first. We have the December contract 11 3/4 higher at 740. That's a long shot off of its overnight low of 724, so it has rebounded 16 cents off of that now. Let's see if Kansas City can keep up or not. Not quite. December is now trading 8 1/4 higher. We're at 724 per bushel, but it's still about 13 cents off of its overnight low. Moving on to spring wheat, we now have the December contract 8 cents higher at 910 1/4. And in that cotton market this morning on the new crop December contract, we have December 40 points higher at 93.50 per pound. Well, I'm pleased to be joined in studio by none other than Chris Swift of Swift Trading. He's based right here in Nashville. Thanks for coming in.
Good morning.
A little more positive tone here on the grain market than the way we wrapped up last week. That was kind of nasty heading into the weekend.
Yeah, they sure sucked the wind out of it last week.
Yeah.
And, you know, coming in this week, I was glad Sunday night to see them open up just a little bit higher, and come in this morning, they're still just a little bit higher. So anytime we're not down another 10, 15 cents on a Sunday night, Monday morning, I always feel a little bit better.
But given the timing and the time of year, is it really kind of hard to imagine that there would be much follow through to the upside right now? Combines are starting to roll.
They are, and we know that most all the corn's made, so there's very little that weather can do with that. The beans could probably use some moisture in that northwest quadrant where it's so dry. But yeah, we're already into harvest, and now actually I think going forward, since we've seen a lot of the data that has come out on what the crop is, there's not that much difference between the two, and since USDA lowered theirs and now Pro Farmer is just a little bit higher than what they are, when we get those actual yield harvest results in, that's what's going to be most pertinent.
It almost sounds like now we're at the point where the wild card could be potential abandoned acres.
There could be.
Northwest.
And there's something to be said for that. When we looked at the 1.5 million acre increase between the March planting intentions and the July actual planted acres, a large portion of that 1.5 million increase came in the states of North Dakota, South Dakota, and Minnesota. So it kind of begs to reason we were a little bit skeptical about a lot of those acres that were planted additionally.
What about the fact that we had crude oil on a tear this morning? Let's take a look at the crude oil price right now for West Texas Intermediate crude. Look at this, Chris, $3.18, $3.17 now, higher at 65.31 per barrel after a low this morning of 61.74. How's that for a rebound? Is that helping the corn any at all? I mean, corn's only fractionally higher. Right
well,
now.
Probably not, but I know because we lost so much last week in the energy markets as well, and I think we're waiting to see what that renewable fuel standards come out. So some people say it's a little higher, some it's a little lower, and so I'm not real sure what that has come out yet, but that will be the driving force for the grain markets behind the energy.
I had heard it was supposed to be trimmed, but then maybe raised in 2022, but the question is how much are they dropping now, and then are they raising just a little bit later, or it's, I don't know. It's a big mess. We'll pause right here. We'll come back and we'll talk livestock right after this. We are back with Chris Swift, and we're talking now about our livestock trade. We had the cattle on feed report that came out Friday after the market closed, And just to recap what was included in that report, we can take a look at those numbers. So here they are. And Chris, I'm curious about your take on how that report came out. The on-feed number as of August 1st was down 2 percentage points from 1 year ago. Now, the trade thought it would be about 1.7% lower, so pretty close. Placements 92%, or an 8% decrease from a year ago. And the trade thought it would be at 93.2, so that was a little bit light. Were you surprised by that number or not?
Not really, no. I think the actual numbers came in very neutral as far as the market goes, but what we're looking at is just a little bit of a slowdown. We're just not quite placing as many cattle. We're not marketing as many cattle, and it's just a little general slowdown, and it makes sense because you got beef prices so high. You know, when we look out into the retail sector of it, we're still seeing exceptionally high retail beef prices.
Now, we had the marketings that came in at 95%, and the trade was looking for 96.5%. Is that just a function of the low capacity that they just can't run them through?
Yeah, and we saw this week, or let me rephrase that, last week was a little bit more elevated, but we noted that some of that elevation was more cows. So we know that we're getting more cow liquidation out of the northern part of the Midwest there, as well as an increase in the dairy cows too. So we're starting to see just a little bit of an increase in that cow kill, and that's taking away from our fed, steer, and heifer slaughter.
But when you say that, then you're talking about more of a longer-term impact, right?
I think so. I don't think that's going to slow anytime soon because everybody is holding out for as long as they possibly can until they see if the weather breaks. And every day that the weather does not break and improve their situation, then it becomes that much more dire, and they may have to liquidate some more.
Yeah, it's not like in hogs where you can rebuild it in like
no, in
6 months.
3 months, 3 weeks, and 3 days, something like that in hogs. So yeah.
So it could have a long tail on the effect from this. Let's take a look at our prices right now. Live cattle quotes with our quotes provided by Bar Chart. Boy, they are firm. Look at the October contract now up $2.32 at $131.37, so they're getting right after it today. On the feeders, you have September up $1.60, and October $2.70 higher at $170.32, so big rally in the feeders as well today. Lean hogs a little more muted, but they are higher. October up 35 at 88.97. December up 57. That's the latest. Thanks for coming in, Chris. Good to talk with you again. Tammy, back to you.